Eric Muathe, Muathe.com, with US market analysis for the weekend of February 10th, February 11th, and February 12th, 2017. Let's take a look at markets here. You can see that the NASDAQ, S&P 500, and the Dow all trading at all-time highs. So it's been a great week for bulls. Let's take a look at those charts. So we begin with the NASDAQ weekly, and here we can see that as we come to the conclusion of the week with about 2 hours to go, the NASDAQ is doing its best to close above 69.1. That would be ultra bullish for the technology space if it can hold above that threshold. And we can also see that the line we were watching for resistance over the last couple of weeks, now we can see that the market has cleared that resistance line, which is yet another layer of great evidence for market bulls. So this was a resistance band, but the market has since moved above that level. That's a good looking chart as long as it is above that blue line. So the RSI looks good, might be the reason why the market continues to chug to the upside. And we can see the last couple of days have had a nice forceful move to the upside. As we can see, what has happened here is also on the daily. As of right now, the NASDAQ holding nicely above 69.1 on the daily. That's a sign of a market that is doing well, and we can see evidence of that. In other words, as long as the weekly and the daily and even the monthly for markets are holding above 69.1, markets are going to be sideways at worst and bullish at best. Let's take a look at the Dow on a weekly chart. And the Dow has been actually the most bullish chart. We can see that if we go to the weekly for the Dow has been holding its weekly RSI since about late November, holding its RSI above 69.1, which explains the technical reason why it has held up and continues to trade well here, looking to close at all-time weekly closing high. So yet again, as long as the Dow is holding above 69.1 on its weekly chart, the market should continue being stable to bullish. Keep in mind on the monthly time frame, we have a very strong market. The Dow moved above 69.1 in December, and it's been trading above that threshold ever since. So as long as it's trading above this number, expect markets to be sideways to outright bullish. Now if we take a look at the Dow daily, we can see a little bit of a, I guess depends on how you want to look at this. There's two ways. I'll show you the bullish way or the bullish interpretation. So this was a resistance line. And so the market was forming this wedge, and we didn't know which way it was going to resolve. Of course, we see now that the market is resolving to the upside. So moving above that wedge gives the market the benefit of the Dow to move higher. So that's the bullish argument. Let me share with you what could end up being the bearish argument, and a good argument at that. And it is the idea that the market is pretty much coming back to test the recent break here. So this break line. So this break here of this highs there, and we had a shallow pullback. So we draw a line from there. And you can see that it has been used as resistance here for these shallow highs, and now we are coming here and market seems to be testing that red line. So in other words, if the market finds the same type of resistance around here and is rejected, then that's a sign that the market is yet again going to have to form another negative divergence, in that the market is making an improvement to day-to-day highs, but the technicals are making lower highs. Ultimately, multiple negative divergences could set the stage for an eventual pullback. So that's the bearish argument. And again, the line to watch is whether the Dow can clear this resistance line on the daily. Take a look at the Dow hourly. We can see that there was a recent move off highs here, which is this break. And of course, that break corresponds with this break there on the RSI. So we are seeing that the market is coming back to test that level. And as of about 2 hours to go on Friday, seems to be a little bit of a problem here. Keep in mind the Dow was up about 123 points. coming off the high slightly. It could be in response to this line, and we'll see whether the market can clear this level. Otherwise, resistance here on the hourly chart suggests that we are looking at the potential for a pullback hour to hour. Now, this could be the beginning of a major turn or just maybe another shallow pullback. We don't know as of right now. If we take a look at the Dow 30-minute chart, we can see that we are coming back here Friday, and we seem to be hitting the top side of the weekly RSI. So on the 30-minute chart for the Dow, if you take the top side, as of Friday, we are coming here and we are hitting that level. If the market is rejected there hour to hour, I would expect the beginning of a pullback on the 30-minute time frame. And again, we don't know the magnitude of this drop. It could be only for a slight drop and a move to new highs, or it could be the beginning of a major turnaround situation. So we don't know yet until we get more information. But clearly for here and for now, we can see that the market's coming back to test that topside level. Failure to move above that suggests that the next major swing trade could actually be to the downside. Let's take a look at the S&P 500, and just like the NASDAQ, this week S&P 500 is doing its best to move its weekly RSI above 69.1, as you can see here, currently trading at about 69.4. So as long as it's trading above 69.1, that's a sign of a strong market. If we take a look at the S&P 500 from the hourly standpoint, we can see that since this break here in middle of December off these shallow highs here, we did get a little bit of a pullback. So the market has come back to test that level on a couple of occasions. Most recently, we were rejected here for the highs of January. So we are coming back here, trying to move above the red line. Of course, bulls would like the market to march on and clear that resistance. On the other hand, bears would like to see the market stall around current levels on the red line, stall here, and that might be the beginning of some type of a pullback. So again, we are back here with about 2 hours to go on the Friday trade, and this is where the market is trading right now. Either we can move above that line for a continued push, or resistance around here for a close of the highs. But if we go back to the S&P 500 weekly chart, this is where we need to be careful, because if the S&P 500 can remain above 69.1, then that's clearly a bullish market that we have to respect. Also, when we take a look at the monthly chart for the S&P 500, now that the S&P 500 is above 69.1, the risk is that this market could continue moving higher. So as long as the S&P 500 is holding above 69.1 on the monthly, be careful, or at least anticipate higher markets with the S&P 500 up and trading above 69.1, as long as that's the case. And I've been talking about this example here because on the S&P 500 chart, you can clearly see evidence of this, as you can see that when the market was trading well between 2013 here and let's call it about middle 2015, this took place throughout this entire period here with the S&P 500 holding above 69.1. So clearly we have to respect the potential for upside if the market can sustain the S&P 500 above and beyond the 69.1 threshold. I'll stick to my guns here. Conviction sometimes is the difference between making it big and just being chopped around in the market. I stick with my guns. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. E-A-C-S. Mwah.